it's Thursday, August 21st. Let's get into it. Wait for the market to open up and see what we have now transpiring. We're in the current downtrend on the 4-hour. So this 4-hour candle is about to close right now within the next 35 minutes. So once the market opens, I want to see how this candle could likely finish up. This candle is currently pushing to the downside. So now let's look at this from a 4-hour perspective. So that 4-hour was 6. It came off of this consolidation here. Swing low here, price took out that low with this push down. We have this big rejection inside of the SIB eating this push down, taking out this low. So see how price goes for this high here. So basically, is at first we had this range right here to this low. See how price plays off of that, off the open. So if I looked at it like that, push there. We're inside of that premium now. And we have 2 minutes till market opens. We already took out this high here. And the high came from this low, so let's see how this price leg plays out. We get that continuation up, taking out this high here. And that would be that market open trade. What time was this? 9:15. Clean push to the highs. 40 points. Should have been it's 30 points. So the risk. About 13-point risk for 1 to 3. See how this market opens, then go from there. Boom, market open. Straight back down to this confirmation. Let's see where the body of the candle stopped at. Step. We had that push up going to, let's see, 2 points away from the high. Stop right at the midpoint of the wick. And this is why you get that market opening volume. And right when the market opened, see how if you were in this position and then price pushes up and you're not managing it, then it comes back down and then the wicks do damage. But we're still inside of the same range on the 15-minute. So today, since we're trending down, we want to see how this 4-hour candle is going to close. So every morning when you look at the market, your focus is that 4-hour candle, because with that 4-hour candle is from 6 to 10. So you have a 30 minutes until that candle closes. And when that candle closes, that's going to be the bulk of the volume for that candle for the direction of the close. So you're just anticipating how that candle should close. So we look here, start of that 4-hour candle will be here. So the candle opened here, but then we're all the way down here now. So the high of that 4-hour candle will be here. So you're getting all this expansion all the way down. So all this will be expansion. But now price is just bottoming out. So let's see how that, with this opening volume, plays off of these levels. And like I say from earlier, we have this 4-hour confirmation and inversion. We're using it as a confluence. So I'll see if price gets down to it. And also I have a midpoint of that daily level here of the wick. So that is 23,177. Here. Right there. But we're focused on current price right now. So we're just waiting. Look at that big old rejection. Those wicks, man. If you don't watch out for those wicks, that's how you get caught up. There's that high that we talked about when the stream first started. Now let's see how price breaks out of this range and see how we develop a new one, or do we retest back into this one? We have this slight consolidation here. So price is kind of just sitting here, but We want a nice push, clean push. This is not a clean push. So you want to wait for a good opportunity. And then also, this is that 15-minute consolidation. Show you real fast. This is a 15-minute consolidation that I have marked up that I'm eyeballing here. So see how we consolidated here, pushed off, pushed above, bounced off of it, stayed in this range, broke below it, and then retested it, and then we continued to the downside, taking out Asian range low. Every morning, I'm just trying to find some key areas of confluence, and for me, that would be consolidation. Already by default, I look at Asian range as consolidation, but if I can redefine it by looking at more of a specific area, then I'll find that area, which will be this, and that's right off of this expansion here. So now back 3 minute. And then yesterday, when we got out the live, we were talking about that push up. Right after we got off, maybe 30 minutes after, I think. It was less than an hour before. We had that push right up for the whole entire day, rest of the day. So it's just a patience thing, man. It really is. So for the hour and a half hour and some change that we're on live, that's what we're focused on. Just, okay, how is the market going to open? And then based off of that, do we have potential to go up or down? Right now, we're just stuck in this range with this opening volume, which is showing us right now indecision. Because if you look at it like this, if I have it zoomed in like this, it looks a lot bigger than it is. And if you use this button, boom, you can see it's really not going anywhere as of yet. A lot of wicks. See if we get that expansion out. $9.45. Appreciate that. Let's see. Today? Where's that? That was 8:45. Oh yeah, duh, 8:45 our time. So that's, yeah, gotcha. So yeah, that can give us that nice push. Let's see how that plays out. So we'll wait till that news comes out in 7 minutes. Yes, sir. Appreciate that, my guy. I gotta put, so I have a bot in the chat that can post news, but for some reason it will post everything. It doesn't post U.S. news by itself. I'm glad you reminded me. Let me see, put it in my notes so I can work on that today. See if I can get that squared away. See, because so if we have that news, we can get a nice push with that news. Let's go 15 minute. If the news can take us back to this consolidation, and then maybe probably sweep this high. If it stays in this consolidation, we continue to the downside because we are in a bearish market right now. For the time being, we don't want to forget that. So we don't want to go against the trend. And as a scalper, especially, you could do that. You can have a tendency of doing both, and it doesn't really matter. But based on the opportunity that you're seeing, if you want a good flowing opportunity, you want to go with the trend. But if you don't really care about that, you want to catch a trade and get out, then by any means take what you can see. But at the end of the day, it is take what you can see. But also, let's look at this really quick. So this is that 4-hour high marked up. You got this inversion, this confirmation. We already went into it once. We pushed out, went into it yesterday, and we had that push up, and then now we're pushing back towards it. So I wonder how this news is going to play out. Are we going to push towards this confirmation here? Because we still have this one here at the bottom that's higher, and we have liquidity sitting right below it, equal lows. So let's see how that plays out. And then also, let me show you. I also have this daily wick here at 23,177 even. And that's the midpoint of this daily wick that's sitting inside of this consolidation pretty much. So, and this level is sitting right at the top of that 4-hour confirmation. So they're pretty much equal. So we'll see how that plays out. So let's see how that news plays out and how that can carry on to what we're doing. So that's 3 minutes. Yeah. Looks like we're sticking around right now inside of this range until price gets that news. Yeah, stuff like this, like that morning trade, this is at 9:15. We pushed straight up. It gave us almost 40, gave us this right here. So it gave us about 39 points before it pulled back down on the opening. And then I think it was a 13-point risk. So looking at a 1 to 3 there. If you're aiming for this high, it would have been a little bit more risk, but for the most part, it gave you definitely a 1 to 2. And then we had that right at the opening, boom, you had that wick. So, and that's what I mean by the opening. You're trying to take trades on the opening, and then you have to deal with wicks doing damage. Man, listen, that thing can be a headache. So why not wait 5-10 minutes, let the market open, let it do what it does, and then capitalize off it after that. Because most time when the market opens, it's going to be manipulation anyway. We just don't know how long it's going to manipulate. It could be 30 minutes, it could be 1 hour, it could be the AM session and waiting until lunch. So all that plays a part. But once we start to turn around, that's when I'm looking heavy on the model. But as market is playing out, especially like this, when you're ranging, I'm more so using the model as a confluence. Like, okay, is it going to hold up? Is it going to break? Okay, if it's going to break, then that means it wants to go to the downside. If it holds up, then it wants to continue up. And then from there, let's say if you've seen something inside of here that you like, so something inside of here that you like, then you will drop down to a lower time frame and see if you have something fractal inside of here, which means seeing the same thing you see on the 3 minute, on the 1 minute, inside of this area, and then capitalize off of that. So it's all a finesse to it, but you got to know how to put the pieces in order, but not complicated. Like I have a student right now that's doing market structure, and this is probably one of the most, this student's probably had the most trouble, and it's just because he overcomplicated it, and I know he knows it. So it also refreshes my mind to tell you guys, like, when you overcomplicate it, it can just make it so much worse. That's why you want to have a plan, a way of action. You don't need a lot of things, because something in the market that we have to be realize is that the more you add, you're actually taking away. So the addition in the market really doesn't mean that you're adding stuff on to make it better. You could be adding stuff on to make it worse. So you want to make it as simple as possible. Okay, we got 30 seconds left to that news. Let me look at it. The news numbers really don't matter for me at all. It's more about the volume that comes into the market. I'll still look at it. It's the only red photo for today, so cool, yeah. All right. News seems to be good, but see how the market plays off of that. Okay, there's that expansion to the downside, so we should be breaking out of this range. But doesn't it make sense that we're pushing to the downside because we just swept this high? Makes perfect sense. So it's still market structure at the end of the day. But when you have news, it gives you the volume to push which way you're looking. So there's that push into that 4 hour. So this level is 187.75. So now that we know that, I want to hide this because I want to distract myself by looking for a bigger time play. You want to focus on what's happening right now. You have areas. That's why it's important to have the index cards or notepads or a book or a whiteboard, something to where you can write down levels so you don't have to have everything on your chart. And you can kind of keep a clear mind, or you have separate charts. But separate charts is kind of hard to keep up with if you don't have multiple monitors. You can have more than one, but I would suggest just having something you can write it down. There's that push. Right off that midpoint too. Okay, let's see if this push stalls out, and then once the push stalls out, see how we can capitalize off of that. Because now we broke out of range here, and we broke out of here, so we have a new range once this settles off. And then let's see how price consolidates, or we're going to keep dropping inside of that imbalance. I'll just lay it over there one time. Just glance at it, so yeah. And that's all the way, the low will be, so 23,000 basically, 23,100 we'll call it. So once it gets to there, and then we'll look at the midpoint as well. So what is that? That's around 23,133. So we're bouncing off of this consolidation now, which we had before. And if you look, when we fell into it the last time, we had that little push here. See that? How we pushed out before, and then we just dropped right back up into it. Well, this time it's showing us that it wants to retrace off of it, but this candle is not closed yet. So this wick right here has went and just taken out these lows, and then this consolidation as well on the 3 minute. So we have this consolidation right here. There. And this is just you getting in sync with the market. Knowing why things are doing things, or why it's acting like that. It's because price is never doing nothing for no reason. It's always doing something for a reason. You just gotta find it. If we ain't making all-time highs, and we don't have nothing to the left of us, then cool, we gotta rely on what's in front of us. But if we see price stopping out of nowhere or getting to a certain spot, wicking real hard, it's doing it for a reason. Now, you don't want to just keep looking left, because as you see, if you keep looking left so much, you forget to focus on what's happening right now, and then you'll miss opportunities, especially teaching. That's something I deal with a lot because I'm trying to teach more than take trades, because you guys are trying to learn how to follow along. And then in the midst of it, I'll see if I have a potential opportunity, but I want to show you multiple opportunities. And then there'll be a point where I'm just on here and we're just taking trades. But I know in the beginning, you guys are trying to get as much education as you can when it comes to just learning how to read the market. So I want you guys to see it how I'm seeing it. And I'm trying to see it as simple as possible. Find consolidation, find ranges, find where the market wants to go, how it wants to play out, where's the volume. And then from there, just ask myself a simple question: can I see it going up or can I see it going down? So like right now, this is a 4-hour candle that's closing. We have 10 minutes till it closes. Now we have that last 10 minutes. We should see a push for the last 10 minutes of that 4-hour candle and see if it wants to retrace up that 4-hour candle, or are we going to close somewhere at the middle of it, at the high of it. Now we're just waiting to see how that plays out. Because remember, that 4-hour candle started here at 6. So started here. So that means the high of that 4-hour candle is here. And then you have the opening of this candle at 23,304. So 23,300. So let's see how price plays off of that. I'll keep that arrow right there. So we got large wicks back and forth off the 3-minute, but look at this 3-minute confirmation and inversion. Price is still technically holding up at it. We're wicking below it, but we haven't broken with the body. That initial stop loss is here. Now that doesn't mean that it still can't break it. It just look how it's having a hard time trying to break it. So that could be indication that price wants to go up. But remember also, we're in a market that's trending to the downside. So if you see a buying opportunity, it needs to make sense. And how does it make sense? By your risk. Not about where it could potentially go. Your risk is the main factor. I'm gonna drop down to the 1 minute in a second. We're back in this range. And you see we're still in this range. We just broke the high and came right back into it. That's all I didn't extend it because there's no point to. You already see that we pushed out and came back in. Yes, this midpoint will be a little bit higher, but for the most part, it'll be the same general area. And whenever I'm trying to operate at the midpoint, I want to be the lower quadrant of the daily range or the upper quadrant. So just want to see how price plays off of that. Okay, let's see how price plays off of this. This is 3-minute range. Make sure we say that. Remember, labeling things is very important. Rejected off of it once again. So let's see now that rejected off of it once again. Let's see how it rejected. Now look at that. 57-point risk off this confirmation right here. No way, Jose. No point, Jose. But yeah, for sure. It's a lot of push for this little area. So especially something like this that has a lot of risk involved. Just imagine getting into a trade and then it goes 15, 20 points against you like that. Because it's real aggressive right now, back and forth. Like this little move, this little area right here is already 13 points. So just imagine you win 1 mini and then you blink and then you're already down 250. And you didn't have to be, because all you had to do was just wait for a better opportunity. So right now, based off of how bunched up it is, it's like I'm hands off right now. I'm just waiting for a price to have a clear path. So let's go back 3-minute. Yeah, this is disgusting. So we can already tell it's going to be kind of a waiting game. We haven't had any clear expansion yet. So now we know like price has already been nasty here. So we want to really break out of this range and then continue up and see if we get a push up. Now, it would have been cool if we had a nice push up here, nice clean push up, nice clean push down, retest off of this 3-minute confirmation, and then nice clean push back up. But we don't have that, and then that news gave us that super long wick. So even though we have things we can use to anchor on to decide if we have a trade or not or potential trade, the fact is how nasty it is right now, it's not going to be clean. And you want to avoid being in nasty drawdown, especially not drawdown that's wicking back and forth or pushing back and forth pretty quickly. 12 points, 15 points. That could be a lot of risk, or you have to cut your risk in half. Because you can definitely do that too. Just cut your risk in half and not have so much risk. But 57 points is a lot. Chart's starting to get messy too, so let me try to clean some of this stuff up. So that's the daily range here. Don't need that anymore. Or the midpoint, don't need that no more. This is 3 minute. Clean some of this stuff up. You know, this is that 4 hour. This is the parallel channel up top. So that was a 15 minute. Then this is initial stop loss, 3 minute. There it goes in there. Now make sure you clean up, man. Very, very important. Okay. So we know that this low is inside of that 4 hour. So if price starts to dip below there, then we'll turn it back on and see what's transpiring. But for the time being, we're just looking in this area and seeing what's going on. That initial stop loss is broken, so I'm going to hide that model for right now. We're getting that expansion where we're looking forward to the downside now. Okay. Let's see how price act at the midpoint of this week. Should line up with the consolidation. 23,204. And then the first body break. I'm just simply getting confluence right now. So yeah, the first body closed right above it. So let's see how this next candle plays out at the midpoint. I think we broke below it. Let's see. No, we broke below it by a tad bit. Let's see how price plays out. 204. Keep that on 3 minute. And a lot of times with midpoints too, I'll put them on there, look at them, delete them. Put them on there, look at them, delete them. Because I'm just using it as a confluence. I don't want to trick my mind to like using it as a trade because I see it there. And then you start seeing a bunch of them and it's like, okay, like which one do I use? Do I use this one? Do I use that one? Like, no, use what you feel is current. I feel this one is more current. Yeah, I have this one too I could use as a midpoint, but this one to me is more current for the situation that I need for this push down. And all I'm trying to do is see if it's going to continue. That's it. It looks like it is. 50 seconds left to this 3-minute candle closes. Really want to break away from this range so we can get some clean consolidation. But if you notice too, we are breaking away from this consolidation. And if we do that, then you have this swing low here, which we already broke, and then you're falling to this 3-minute model right here as a confluence. So see if it holds up. Okay, so if that holds up, then I'll take this off. Okay. See how price pushes down. Just need a clean push, clean consolidation. Remember the midpoint of that 4 hour was 130s. Look at it again. Yep, 133. And then you can even look at this 4 hour into quadrants. Yeah, we just had that 4 hour candle close. Take a quick glance at that. So look at that as quadrants. So we went to the upper quadrant and we pushed straight up back into this consolidation. So that could be a key confluence. Then let's look at that 4 hour really quick. So as we see, 4 hour candle is now closed, and we close with this big push to the downside. So now your mindset is two things. Either this 4 hour candle is going to keep this imbalance potentially open, or we're going to go and close it here. So now you have a directional bias. Either we're going up to go to the low of this candle here, or we're going to kind of consolidate or play around and then continue to push to the downside. And then the next candle can be the push up inside of here or the continuation down. Boom, just like that. So now you got a directional bias on a higher time frame, just that fast. So they can go here and say 4 hour fill, just to let you know that you're looking for this price to go up to get to fill it. Then now you go down to a 15-minute. You see where that's at. Boom. So price needs to get up here to fill it, and then what's sitting right here? A 15-minute SIBI. And what is it up there as well? Liquidity in the form of this high, swing high. And now what is price doing with this 3-minute? Going back above it. Right back inside of this same range we were just in. But now, do we have one? Ooh, that's close. I don't think we do. Oh yeah, we do. Yep. You got this inversion right there. Then all this can be confirmation. This gap, but look how much risk it is. That's way too much. But you can use it as a confluence. So let's say you was like, I want to take it, but it's too much risk. Then I would say you can take it. If it makes a confluence of the confirmation, and it was just too much risk for you, then I would say, okay, we'll put your stop loss at the low of the consolidation. But you have to be aware that price can go down there and stop it out because it's not the low of the confirmation. That's you fine tuning what you like to see, but also making it towards what's going on right now. Sometimes it's not going to be the best situation, but you can make the best of it by staying in sync. And that's why being in sync is so important. Because like I told you guys before, I had the model, I would trade everything. I would just trade what I see. But I was already doing inversions and confirmations without even knowing it. But I would just trade what I see. So when I like the market to flip, to continue going one way, then I would see it all the time. Or even if we're in continuation and we in consolidation, then that happens. And then you get that push. But for the most part, I'm looking at everything because I want to be able to see both sides of the story. I don't want to, it's like, listen to an argument and you hear one side of the argument. Of course, you want to take that person's side because you only hear one side. I want to hear both sides. So that way I can make a good judge off of me and what I hear and not just what somebody told me. And that's why I want you guys to be capable of being inverted, you know, with your bias. And being able to look at it on a dime and see if it's flipping or see if it's continuing or see if it's consolidating. See that ahead of time because you can. Because price is always doing something for a reason. So I hope these lives are helping you do that when it comes down to just seeing that perspective. Because usually I'll get on here and I'll just lock in. I kind of just walk things down, and then when I feel like I have a good opportunity, take it. But for the sake of the live, I want to teach as best as I can and just narrate as best I can when it comes down to what I'm seeing and how I'm seeing things operate and why they're doing certain things. And that's the point of the lives. And then, like I say, the lives, I get to a point where we're just taking trades and that's it. But for the most part, for the beginning part, I want you guys to have the education on the live markets. Okay. So now we have that expansion up, going back to this high, but it makes sense. And why does it make sense? Because we had this dealing range. We took out the high, we took out the low, and now we're going for the high. Simple. And then you can even, if you want to, it's close, so you don't really have to, but look at the midpoint here. That midpoint is 282.50. And all you want to do is see how price goes to it. It doesn't even have to be how it closes or how the body closes. That's one part of it. But you want to see how price reacts to it once it gets to it. Does it like hit it or retest real immediately? Does it break through it like it's not even there? All those things matter because it's how the candle is printing. It's telling you a story. So if you're able to see how the candle is printing now, then mentally you can already see what a 1 minute chart is doing because you're already seeing how price is flowing, how price is going up and down. So we got that breakthrough and then we had that retest. So now price is just going back and forth, back and forth. So if it's going back, forth, what is that on a lower time frame? Consolidation. So you can say, oh, price was consolidating at this high before we pushed down. And then we had expansion to the downside. Boom. Okay, it's about that time. Step away for like 5 minutes. I'll keep, while I'm away, I'm gonna keep a 5 minute and 1 minute chart pulled up. I wanna be in a good range first before I step away real fast. Okay, rejection off that midpoint. So we haven't broke the high yet, but look at this high here. This high is 23,290.25. And this high right now is 23,289.75. So now price can potentially come back to this consolidation, and this consolidation here, total ranges is 21 points. So you can see if price does come back to the consolidation, how it plays out. And if it doesn't, we get that continuation back to this 15 minute, see how price plays out at this 15 minute, because we have this general area which we can see something happen. So you don't want to see one candle go up there and do whatever. You want to see bulk of data, so a bulk of candles that gives you a general idea of how price wants to react at this 15 minute. And you can go to the 15 minute and look at price action after it goes into this and see how it's panning out. But like I say right now, I gotta do something really fast, so I'll pull up here. Set that up there. We'll go 1 minute there. And then we'll hit the So this is what we're looking at now. We're trying to see if price is going to go to that 15-minute consolidation, or is it going to retrace into this BISI inside of this consolidation, and then from there, see how it bounces off this inversion. If it does, or if price plays around inside of here, it looks like it's going to continue up to that 15-minute consolidation. But remember, this is a bearish market as well, so that could be the push right back down. But this is also bouncing off of that 4-hour confirmation. So it's based off how you want to play it. The opportunity that you're looking for. I'm looking for a good opportunity with a good amount of risk. That's the main thing that I'm focused on. I can care less about what it's doing, going up or go down. It can do whatever it wants. My whole thing is, does an opportunity present itself that has good risk? That should be your focus every single day. The risk. Okay, and I'll be right back. Okay. We're getting that push up towards that 15-minute consolidation. Let's see how our price plays off of that. There we go. So now what I want to do, so I want to look at the 15 minutes, see how that looks. So boom. Now we see we also have borrower imbalances now filled. Just like that. So now that we know that, back to a 15-minute. And now we can see how price plays out at this key area. So if we look here, we have this small, tiny inversion and then confirmation. But this hasn't taken any liquidity. So now when it comes to me looking for this as a model, I wouldn't look at this as a model. This will just be an inversion. Because the model will be it taking liquidity. So now what you want to do, you can still use it as a confluence because you can still see that you have this imbalance right here. I'm not looking at it as a confirmation. I'm looking at it as a regular imbalance. And a 15-minute there. Here. 15-minute. Low. Locked up. Go back down to a 3-minute. And see how price retrace right off of that 15-minute. So now let's look at that on the 1-minute. So now this has taken liquidity. So if price wanted to go down, then you want to see this imbalance so far invert. Now I can take this off because that's a level that we already used. This daily range we no longer need. We don't need that. You're gonna start removing things that you're not using. You start having things on there that you're not using, prices away from it. You already dealt with it, cool. Get rid of it. Let's focus on what's going on right now. A lot of times people have stuff on their chart they're not using and it just plays on your mind. You start looking left, start looking right, trying to dictate what's going on. Like, no, what's right in front of you. We're not saying, oh, price should go down from here. We want to see what's going on. Just get in sync with it. And then in the process of being in sync, something will pop out to you that you feel like is good for you and that you can capitalize off of. So for me right now, this can be a good potential if it plays out like I want, but it has to play out like that. So it has to, step one, it took out this high inside of a key area. Now let's see if it wants to continue back to the downside. And if it doesn't and it keeps going, guess what? You get in sync. As simple as that. And a lot of people struggle with that because it's like it gotta do this, it has to do that. No, it don't. That's why being in sync is so important, because you don't feel the need for it to have to do something. It's like whatever it does whatever it does, and I just capitalize off of that. So now if it takes out this high, then I focus on this high, and then imbalance after that high. If it doesn't, then I focus on this one. Because if it takes out this high and doesn't go anywhere and still comes down, I'm still focused on this right here because this is still the price that I'm focused on. And like this 1 hour is still bullish. Like look at that. So you gotta be aware of this too. The Asian range high is right there. So we still can go flat liquidity. So let's see if we get a continuation up. push up. So we get some continuation. Because remember, this is the 15-minute imbalance right here. So you have to look at the 15-minute candle and see how the 15-minute candle closes. All right, not a 3-minute. So we have 8 minutes, 7 minutes to that 15-minute candle closes. So it can very much go up here super high and then pull back down super hard. And then that could be a 15-minute wick. So you have to be aware of what's going on. That's why it's important to label things. It's like this is labeled. It's hard to see. Put that at the top. Right now we are in the 23,300s. Currently sitting at 23,320s. Let's see if it goes down and closes this imbalance. We're going to continue with the open imbalance. Closed it. Okay, 5 minutes left to the 15-minute candle closes. Right now, currently, it looks like this. Let's see how that plays out. There's that pullback that I was telling you about. That's why it's important to know what imbalance your time frame is, what time frame the imbalance is on. Because just because you see it break above or below doesn't mean that price is going to continue going up or down. You have to know what time frame is on to correlate that. See how it still looks. Okay, rejection at that imbalance. Price showing the willingness to probably continue. minute left to that 15-minute candle closes. Right now we're looking good. Looks like it's gonna stay above that imbalance. There. That's why it's important to wait for the candle to close. That is key. And we're in a area where we can capitalize off of what's happening based off what the market structure is trying to tell us. And wait and be patient. So now, if this is saying that we don't want to hold below, we could be looking to potentially go back above, but we are taking liquidity here, so you want to see how this is going to play out after this candle closes. Don't take nothing just because. Always have a reasoning. If you have a good reasoning to take it, then you take it. If you don't have a good reasoning, don't take it. You'll regret it every single time, even if it works out for you, because it'll come bite you in the butt later on. Okay, 15-minute candle is closed here. Close above. We're rejecting back inside of this consolidation. Let's see if price wants to hold up inside of the consolidation, or we're going to continue to the upside. So now that we have a general area where we at, go down to the 1 minute. Get in sync with what's going on right now. So we're getting that push back down. Got this tiny inversion here. Like real hard to see. I'll show you. Price is pulling down to now. We'll see how price plays out there. There's that inversion. There's that low. That consolidation. There's a retest. See if price holds up to the downside. Back to this 1 minute. As I talked about earlier, that could become an inversion, but now we have that here in the 1 minute. It's an actual inversion. And then we have this. Price is going to go to the downside. That's 20-point risk. So you have to believe that price is going to push down pretty deep retracement. Let's look at the 15-minute. We got a hard rejection off of that consolidation. But this candle just opened. So this can be a big retracement. Depends on how the market wants to play out. hard rejection off that consolidation. Let's keep that on the 1 minute too. Just thought about it. This here is 1 minute. See how price plays off of this. So we got that hard rejection off this consolidation. But now the question is that consolidation going to hold up? Because we just broke above that 15-minute. That 15-minute consolidation with that candle. But that very next candle was the bearish move down. But that candle could be a potential huge wick. So it depends on how it plays out. Is it playing out smooth to you? Is it choppy? Is it not? Is it hard to read? When you start feeling like that, you back off. It's super simple. Most people try to push on the gas. No. You're going to get to the point where a market is going to be super easy to read. And if it's not easy to read, then it's not what you're looking for. Because your mind is telling you already that it's not a potential A+ for you. Because just you have a clean model, cool. But it's the setup A+. It's the way that everything played out A+. It's a storyline A+, not just the model. Let's see how price holds up here. Okay. It's pushing down, but let's see if it continues. Is it going to reject? We have a lot of areas where it can kind of stall off at here, kind of in this general area here. So it can kind of find some support, kind of just stall off and sit here and consolidate. So if it wants to push down, let's see if it pushes down aggressively. 1 second. And this is us being in sync the entire time since the beginning of the live. Just being able to watch the market, observe, see what happens, see opportunities you don't like, see ones that fit you more, see ones that kind of like, I don't like that one. You can pick and choose, but it's based off what you see and what's understandable, what's clean. Nice, clean, push off this consolidation. look at this spot, right? You're seeing rejection here. So you see this push down, it stops and then it rejects. So when I see something like that, I'm looking like, okay, what can possibly make it reject? Well, this area right here. Why is this area kind of important to me? Because this is expansion. Right after this expansion, this is the first consolidation right after this expansion. So this could be an area potentially where price does stop at. From, I would say, this body low to that body high. So like kind of like that area. And then look at that. And then if price breaks through this and we continue to the downside, boom. But if it holds up here and then it goes back above, now it's like, okay, I don't like that. Just like that. Price is always doing something for a reason. You gotta just find out why. So we break out of it. And you see, I'm not complicating anything. I'm just simply following market structure. And as prices going, I put myself in situations that I see, and then I'm just following it. So imagine when I didn't have the model, this is what I was doing. And I'll take small trade here, small trade there, small trade there. I'll take like 5 trades. And then I'll still have a good day, a green day. But I'm just standing and sinking. I'm taking trades as the market is going. But having the model makes you wait impatiently for the right opportunity. So even seeing this and seeing how all this is playing out, see how we're able to map it out the entire time, even to the point where we're looking for the candle to close and dictating how the candle closes, how the candle is playing out as it closes, can help us determine how price should play out on the following candle, on that 15 minute. Now we have about almost 15 minutes till this hour close. So that plays a part too. And the fact that price stopped here and we start to use this consolidation. Now, let's say we didn't have this at all, and then price just stopped there randomly. You don't have anything to anchor on, like no swing lows, nothing really to anchor on. But now you do, because you see what's going on. It's obvious to you now. And this is also too, if you're managing a trade, let's say you're in a trade and you're trying to manage it, this is a way to manage it as well, because you're just staying in sync. See if it falls into this BC right here. It may wake up into this SIBI before we fall down, but we'll see. Because it may wake up into this SIBI, create a swing high, push down, take out this low, fall into this BC. And all I'm doing right now is anticipate. If it did something totally different, I can care less, because I know with the proper skill set, if I'm at least looking in the right area or giving myself general bias of what can happen, then I can base it off that and then build off of that. But I'm not going in, I'm never going in blind, because I'm always having a way of looking at the market. 11 seconds left till that candle closes. Nice push up, nice expansion into that SIBI. See how price plays inside of that SIBI. Two, one, like clockwork, create a swing high right there. Let's see it go for the swing low. Right now, on a smaller scale, this would be our range from that swing high and this swing low. So no matter what price did, I'm anticipating going for that swing low, but no matter what it does, be in sync. Because now you see what's going on inside of the range, even dealing with the consolidation. So when we had this pushback up to take out this high, we're coming from discount. Boom. And that's discount at the low of this consolidation. So I was anticipating it to go down to the downside to go take out this low. But if you see it go down to the downside, it doesn't go take out that low, but guess where it's sitting at? It's sitting inside of a discount. And discount, what does price want to do? Go up. So if it's not continuing through from a premium to a discount, if it's not in the continuation and it stops, then you're going to get a discount buy up to go for the high. Just like that. Let's see how price plays out here. Keep that on there. Now, is price going to be in a continuation, or is price going to develop a new range? So what I mean by continuation is once this high is taken out, we don't take out a swing low. We continue taking out swing highs. Or is price going to develop or expand the range by going down and taking out the swing low? And then that means we're just consolidating at consolidation. I'm keeping this here because I'm showing you that this was the break. But if I want to, I can show you, I can make a line indicating that. Because I want to show you where the midpoint is now. So this will be the line indicating the break. And let me show you the high of that and where the midpoint is now. Here. Discount. Too. That is important. This was slit. discount to premium, back to discount. Back to premium. And just because we identified this consolidation right here, we were able to identify this whole thing of what's going on, how to follow it, all that. So people see this as price doing nothing. They can't read it, and they can't see what's going on. And the whole time we see exactly what's going on because we're developing the story the whole entire time. That's premium. See how it keeps rejecting the premium. Back into a discount once again. It rejected the premium 3 times. Here, here, and here. Premium again. So now you ask yourself, like, does price really want to go up, or does it actually want to go down? Well, I'm seeing the projections like it wants to go down, but I'm in a consolidation where it can likely go up because we broke back above it. So now this is where you rely on what you're seeing and what you can see happening, because like I told you earlier, if we expect a continuation, then it's not looking for swing lows, it's looking for swing highs. So if you're bouncing out of consolidation and you're looking for price to continue going up, you don't want to see it take out a swing low. So if it keeps falling into a discount, your intention is to see it go up. But in order to see it go up, you don't want to see it go down too far. And as you see, the whole time we kept going up into discount, we never took out this low. Right there. They tried to. Then we push right back up. But this can be a small push up and then it push back down to take out that low. This is just you being able to walk the market down. Once you get to this point where you can walk it down like that, you're going to feel untouchable sometimes. This is a scary feeling. Because the model is something concrete. It's mechanical. You look for a swing high, swing low. Once you have a key area, once that swing high, swing low is made, you look for the model, wait for the price to come back to that confirmation. After that confirmation, depending on which one you like, you take the sell off. You could have had this one, or you had this one right here. Right there. And as you see, this candle right here never touched it. So once this model is had and price pushes to the downside, there's no trade for you because price hasn't came back to this confirmation as of yet. But what happens if you don't have the model? The model's not present. How do you stay in sync with the market or find opportunities? If you're in sync with the market, you will find opportunities because you're following it as it's going up, as it's going down, as it hits consolidation. Like a trade, one thing that I love doing is taking trades out of consolidation, because when you get in consolidation, you're getting price ranging and it doesn't know where it wants to go. So if you can anticipate if it wants to push out or not, then you can capitalize off of that. And all of this is from the fact that once this high was taken out and looking for a possible continuation, looking for price to not develop a swing low to take out, but instead just keep going for swing highs. And that's what it's doing right now. Now, when price comes back up to here, what is price going to do? Well, you have to see how price is going to react. Is this something you want to take based off of the risk, or do you feel like price has potential to keep going up? That's what you had to ask yourself. So now we just broke this high. Question is price going to go back down all the way to that low here, or are we going to keep taking out swing highs? Because this swing low right here is the most current. Four minutes left. We got 4 minutes left into the live, and I want to leave you guys with just keep it simple, man. Don't overcomplicate anything. As you see, you don't have to. There are going to be opportunities. There's not going to be opportunities, but you got to be able to read the market, and those opportunities will pop out to you. If they're not A+ when it comes not just to the model, but to how you see the market, then you simply wait. This market is here 5 days a week, so there's no reason to peer pressure yourself into taking something. It's not. And because once you know what to look for and how to look for it and how to flow with it, it's just like wait your turn. And we're consolidating right at the high. So why are you consolidating right at this high? Well, there's consolidation right to the left of it. Continuation. These lows right here, price is not going for yet. So then you want to see, okay, is it going to break above this consolidation and keep going? Because we have our candle closing. That's key. So if you don't have that volume spike within the last 10-15 minutes of that candle closing, then it's going to be kind of a cruising ride into that next hour. So let's see. I'll stay on for the first 2-3 minutes of the opening of the next hour candle. See how it opens. Okay, 1 minute to the hour candle closes. Look at it. Big rejection. But candle is still bullish. So then we go 15 minute. That's closing as well. and then you see you have this bullish 15-minute candle off of this 15-minute right here. There. So then you go back 3-minute and look. There's that 15-minute right there. Right at the midpoint of this range. Get that expansion up. Hour didn't open aggressive. So now, what you have to ask yourself is, okay, you see a 15-minute push up. This is a 1-minute sell model. Is this 1-minute sell model lining up with what you're seeing on the 15-minute? If it's not, then it's not something you want to take. But if you want to take the sell based off the risk, by any means. But you have to be aware of the risk. The risk for the first consolidated confirmation will be 15, 16 points initially, and then the second one is 22 points. If you don't see it pushing down at least that or double that, then is it worth taking? Ask yourself that. Or could you see it breaking above the 15-minute consolidation and then continuing up based off how the 15 or 1 hour looks? And I'm gonna leave you guys with that, man. I hope that was very informational today. Just trying to get you guys to get in sync with the market and be able to follow it. I'll go ahead and upload this now, and so I can go ahead and post it in the group to you guys, so you can go ahead and watch it just for informational purposes. So I will get to you guys tomorrow. Let's get it.